Hello, chart watchers, and welcome to this Thursday, July 18th, 2019, Market Watchers live show with your host, Erin Swenlin, guest host, Mary Ellen McGonigal, and special guest, Julius de Kempenaer. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, let's go ahead and we're going to take a look at the market right now and what is going on. All right. Not a good day right now on the Dow or most of these major indexes. Not liking the looks of this particular day on the market. As you can see, S&P is down almost 10 points. Dow is down over 128 points. NASDAQ is falling fast as well, currently down 45 points. NYSE is also down right now 22 points. Mid caps and small caps actually don't look nearly as bad as the other major large cap indexes. Treasury yields are about the same, mostly unchanged. Volatility index continues to rise. We've got a reading now of 1437. UUP is making a test of yesterday's lows, and gold is making a rise. It started negative, but is now in positive territory. USO continues to slide lower, down 2.64% right now. And TLT, the bonds, had a gap down today, but are consolidating right there down 52 cents, reading 131.47. All right, let us bring in our panel and guests. First of all, co-host Mary Ellen this week. We really thank you for all of the work you've been doing.
Yeah, it's been a lot of fun. It's really jumps you right into those markets, and there's a lot going on this week, so it's been great.
Indeed. That's probably one of the things I like best about Market Watchers Live. I get to have my finger on the pulse.
That's it.
Julius, great to have you with us today. Looking forward to seeing you face to face today on the panel.
Glad to be back, Erin, and happy to join the show again, as usual.
Oh, well, thank you. All right, Mary Ellen, I'm going to pass it to you and go ahead and let us know what's coming up.
Yeah, you bet. So we've been talking about this all week. Next week is going to be Relative Strength Week. You do not want to miss this because, as mentioned, this relative strength component for your trading is really critical. So we have a lot of experts coming in next week. Mark Chaikin will be here on Tuesday. And then on the 23rd, we have relative strength versus RSI. These are two different metrics. You're going to want to know the difference. And then Gaddis Rose is here on the 24th. Julius de Kempenaer will be back with Arthur Hill. And we have Dave Keller also joining in with the Relative Strength Week. And then on the 29th, we're going to review August seasonality. That's Tom Boley. You can really get a jump on that August period with that segment. Today, we have a lot jam-packed. First, we are going to have a roundtable segment, Agree or Disagree. And this is where sound statements are put out there, and we're going to share our views there. Erin is going to go ahead and do 10 in 10. So go ahead, if you haven't already, put your stock ideas in there. Talking technically, a little piece where one of our experts is going to share their technical expertise with you. And our last segment, the three of us, Julius, Erin, and I, are going to share with you our trading routines, how we prep, whether it's for the day or for the week. So you're not going to want to miss that.
And that is excellent. So I'm going to go ahead and start us right off with our technical news and headlines. First up, of course, is our key economic reports. The weekly jobless claims numbers came in, and it was 216,000 versus 220,000 that was expected for jobless claims. They said that claims rose about 8,000, but no sign of layoffs are rising. The unemployment benefits right now remain near a 50-year low. As far as the Philly Fed was concerned today, their business gauge had a reading of 21.8 versus 0.3 last month. So with that business gauge, the fact that any any reading that is above 0 on here, it indicates improving conditions. So, economists had been polled by Econoday, and they were expecting just a 4.5 reading. So the 21.8 reading just blew everything out of the water. They're really very optimistic because the fact that the new orders measure, we posted 4 very respectable results, and significantly weakening in February and March, but now we are starting to see this encouraging sign. It suggests that the factory sector, which has been suffering from an inventory correction, and of course the weak demand abroad, the effects of the tariffs, but the fact that everything hasn't fallen off a cliff. Josh Shapiro, chief economist at MFR and Corp, says that it is a positive, very positive sign right now. Let's go ahead and look at some key earnings. I'm going to start with, you've got UNH made earnings. Everybody actually hit their earnings results as expected, with the exception of, and you'll see it on the next slide, Nucor Corp. They were the only miss today that I was recording. They came in at 126 versus 132, which had been expected. After the bell, some of the important stocks to look for reporting those earnings are Microsoft, Skyworks would be another one. We've got E-Trade up there, as well as Skechers. So those are the ones you're going to want to look for after the market closes. Let's go ahead and I'm going to look at just a few of those earnings charts. And we're going to start off with Blackstone. This one, they reported 57 cents earnings versus 50 cents that was expected. Now, when I looked at the chart, my first, at first blush, as they say, I wasn't liking it too much because, you have this PMO sell signal sitting down here, and the PMO momentum has been flying lower. Look at the OBV. It's also been not really performing the way you want. And the best news, I guess, would be that the scooter is still in the hot zone. But with this move, it has popped above its declining tops trend line. However, I would be very suspect of this one just because you can see that it has pulled way back. The open and the close are below that declining tops trend line. So caution, I would say, right now on Blackstone. The next one I'm going to look at is, of course, that Nucor because they did have an earnings miss. They reported $1.26 versus $1.32. It's not hurting them that much. They're mostly unchanged, but a few features on this chart that I'd like you to note would be, first, the possibility of a double top forming here. Notice that it didn't make it above its 200-day moving average. I mean, I think it's positive. You got that 20-50-day EMA positive crossover, but the PMO has been trying to turn down. And if we break what would be called the confirmation line down here on this double top, the expectation is actually a move about the size of that pattern. So what we would be looking at is a move almost down just below $51. So I would keep an eye on this one. The PMO is suggesting to me that we could get that decline to come in, but the scooter has been not so great. Volume's trying to improve, as you can see, but with this earnings miss, I would be a little concerned here. If I owned it, I would probably sell it right here and sit on the sidelines until this gets worked out. All right, another one I thought I would look at, and then we'll look at some of my general market charts, is Danaher. I know we get this requested a lot for the 10 and 10, so I know some of you out there are very interested. Now, this chart, I think, looks far healthier than any of the other charts. Now, we still do have that problem a little bit with price, the open being right there next to the close, which is just about on that declining tops trend line. However, I'm starting to see some improvement here on that PMO. It wants to turn back up. OBV has been, not great, but not horrible here. Mostly sideways movement on the OBV. I will want to see some really nice volume come in on this move to the upside. And I would also prefer to see the close a bit higher than that declining tops trend line. But you can see we do still have a pretty strong scooter here on Danaher. It is in that healthcare space. And if the market continues a bit lower here, I would expect it to improve a bit here. People a lot of times will go into that healthcare sector when they're a little not confident, if they're not confident about the market necessarily. All right, I wanted to look at the broad market indexes right now. And this is the price charts for the ETFs for obviously S&P 500. I've also included the equal weight here, and the NASDAQ 100, of course, is down here with the Dow. Now, what I have done, and if you watched yesterday, what I have done is the most recent high prior to now, I have marked with a horizontal. And you can see with the S&P 400, it has not been able to overcome those August, September 2018 highs. Meanwhile, you can see RSP and, of course, the S&P 500 itself have been really performing quite well. Notice also with the S&P 400 and especially the S&P 600, the very wide margin between their all-time highs and getting back up there to even challenge them. I mean, the small caps are really concerning right now. The Dow has managed to get above. It made its all-time highs earlier back in April and May. And of course, we set a new one back in June, but we can see it's still very healthy, certainly more healthy than what we're seeing from the mid caps and those small caps. NASDAQ 100, popped up, made some new all-time highs, the QQQ, and it's now falling back down toward, below the resistance / support over here. It's falling lower. So that is a little bit of a concern right now. I really wanted to pop in and show you my ultra short-term indexes, and then we will go into the scooter mover of the day. But what I pointed out in my decision point midweek review is that I'm seeing some possible selling exhaustion readings lining up here, and I am expecting the market to turn here very soon, if not tomorrow, next week. I'm not expecting a giant, huge rally. What I'm looking for is what we got the last two pullbacks. And notice in the last two pullbacks, we ended up with the VIX. It didn't go all the way down to the bottom of the Bollinger Band on this inverted scale. It stayed pretty much above its average, but right about when it hit it, it bounced off, and that's when we saw the re-engagement of the rallies in the shorter term. Right now, we have just fallen today below that. So we may need a trip down to the bottom Bollinger Band, but I think we can, still start looking for that turn in the short term based on the breadth readings, which are pretty climactic right now. I would say more so for the net advances minus declines at this point. So I'm starting to look for a little bit of a move to the upside. All right, let's take a peek at our scooter of the day, and it is Synovus. All right, well, we need it on my regular chart here. There we go. Need to reorganize those buttons. All right, so Synovus is our scooter mover of the day. You can see that it is making that pop there on the scooter. Mark that with a trend line here. We're seeing that pop on the scooter. We've got a nice look on the OBV. Look at that PMO. It's still moving higher, and notice in the thumbnail, it is starting to accelerate. I like this possible cup and handle going on here. So I'll mark that real quick. There we go. Then you could mark the handle right here. And now we're starting to break out. I would watch, you've got that 50-day EMA positive crossover. We still have not managed to get above that 200-day EMA, but I would have to say, given the setup of these indicators, I would expect it to at least challenge it, if not break out above it. And that was your scooter mover of the day.
Well done. Okay, let's go ahead and get started. Take a look at some of these upgrades and downgrades. Per usual, I will tell you there are more downgrades than upgrades, but we can go ahead and jump right in, and I'll share with you some of these stocks. The first one is certainly a well-known company, Apple. They were upgraded today, which is very interesting, and this is on the heels of certainly the trade war fears are rearing again, but we can see that the stock here is very much in a confirmed uptrend. This is Apple daily chart finding support at this upward trending 10-day simple moving average. RSI is up here. It's been above this net neutral 50 since this downtrend reversal in mid-June, and then your MACD up here above this net neutral as well. So the stock is in very good standing. The upgrade really not impacting it, but we're having a little bit of a tough day in the broader markets. PetSmart, this is another PSMT that was upgraded. Take a look at this action here last week. The company came out, reported earnings that were quite constructive. Interesting to see that the stock is now able to break above this 200-day simple moving average. As you know from my work, I need to see that before the stock can advance further and really truly reverse this significant downtrend. A lot of volume here on this up action, which is quite constructive. RSI is a bit oversold. It's above, overbought. It's above that 70. So look for a potential pullback, but your MACD is positive as well. Another upgrade is Treehouse. THS is the ticker symbol. This is a company that came out with earnings in back here, but since then it's drifted back and it's kind of in a bit of a go nowhere environment. Today's upgrade is popping about 2%, putting that RSI positive again. The MACD not quite positive yet. This stock still has a little more work to do before I would turn bullish on it. ABT, of course, this is Abbott. And we can see that the stock is very constructively it had this nice gap up. They came out with earnings yesterday. Analysts like it. And then so today we are seeing an upgrade in response to their strong earnings report, breaking out of this nice 2-week base. RSI and MACD are positive. So this is a very constructive looking chart with Abbott poised to potentially turn higher. Let's go ahead and move over to these downgrades. And the first one is a cannabis stock. Yesterday, we saw a lot of upgrades, or at least one in this area. Today, they're not liking it. This is Aurora, ACB. We can see that the stock is below these downward trending simple moving averages, which is not very constructive. It certainly is in a very confirmed downtrend here. AGN, this is Allergan. They were downgraded today. This pop-up here, the stock was bought out by AbbVie. And since then, the stock has languished. It is being downgraded today as analysts review that potential merger. The stock certainly did get into this overbought area following this huge gap up. So in this near term, it's in certainly a bit of a trading range, trending a bit downward. Let's take a look at a heavyweight semiconductor stock that got downgraded today. This is Advanced Micro, AMD. The stock broke out of this nice 1-month base, really looked to be on its way to advance further, has since drifted back. So that would be a failed breakout. Today's downgrade is pushing the stock down about 2.5%, but we're still in positive territory. The RSI and MACD are still above that net neutral 0. We are still certainly in good standing. I wouldn't sell the stock. In fact, it could be very much a buying opportunity on this pullback. APD is another Air Products that was downgraded. This stock is actually due to report their earnings, but we can see here more recently it's been in a go nowhere environment as it drifts sideways down a bit more on the downgrade today. But again, your technical outlying signals are still positive above that net neutral 50, and then your MACD is drifting downward but in positive territory. Let's take a look at one last on this downgrade. MGM, they're due to report a week from today, next Friday. This stock is a lot of these gambling stocks. They're all about Macau numbers. So they had explosive moves in June into July, but we are seeing a bit of a drift and a drop. When you see companies where analysts are lowering estimates going into earnings, generally not a good sign historically. And with that, we will be right back after this brief break.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
I think StockCharts is a fantastic platform, especially the fact that it's web-based. So on the car on the way here from the airport, I was bringing up my cell phone and I was looking up really beautiful charts to get a read on what happened. I looked at the market summary page, and then I'm drilling into individual charts.
StockCharts is unique in that you've got all of the perspectives of many of the technicians.
A sincere desire to really help educate investors, and that's really critical.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
All right, welcome back, and it is time for our panel discussion. This week we thought what we would do is do agree or disagree. So we'll pick some headlines, or we're going to pick some topics in technical analysis. We're going to look at all different things, and I'm so glad to have Julius and Mary Ellen here with me. Do go and take the poll, because one of our questions that we are going to debate, if you will be in the poll, and we're going to want to see what the poll says as soon as we are done. So let's go ahead, and Julius, I'm going to start with you. So what statement do you want us to agree or disagree with? And we will give you our thoughts on why we think the way we do.
Excellent. Well, the first statement that I want to bring up is maybe not so visual or a question or something like that, but it's more like, if you do your analysis, would you be able to do that on a plain vanilla chart, a bar chart, a line chart, or a candle chart? So no indicators, no RSI, no relative, no PPO, PMO, nothing, just a plain vanilla chart, just price.
Well,
can you do it or can you not do it?
Can I ask
first, Mary Ellen?
Sure. Would volume be allowed or on that chart, or as?
All right, you can have volume with it.
Well, thank you, Julius, because you just saved my sorry ass. No, the thing is, when you're looking at charts, for me and for most chart watchers, it's going to be all very visual. You want to see, is that stock poised to break out of what I call a saucer base? Is it hitting new highs? And while I use a few simple moving averages, and I'm very simple with my chart, but visually, that's going to tell me a big story. And when I can combine the visuals with volume, that is going to be quite significant for my work. So I think I could do it. I wouldn't have that superpower confidence that I might otherwise have, but for me, I've been viewing thousands of charts each week for about 20 years now. So I feel, given that backdrop, I might be able to do it. Yeah.
All right. I have to say, for my answer is yes, I think that I could. And I'm going to share the screen and show you how I would. I picked out a chart and I stripped it of everything. This is Microsoft. So what I would be doing is looking for those support and resistance areas. So I think you can use that to help with your trading. Of course, I like my
I think
tool.
you're cheating.
No, not really. It's just the price chart, right? And I can analyze it. So I think you can still come up with some of these support levels. You can look here and see right on this Microsoft chart, a possible double top, meaning you could look for, a breakdown below that confirmation line. You could say right over here, there was a flag formation, and that is, of course, bullish, and you would expect the breakout, and you would expect it to actually go much higher than it is right now. But sure, I can do that. Can you do it, Julius?
Yeah, I'll be able to do it. For me, price is super leading. I mean, although I use my RRGs and a lot of relative strength analysis and all that kind of stuff, but people who've heard me before and have seen me before, I will always stress that whatever tools you use, whether that's an RRG or a PPO or PMO or anything else, in the end of the day, you are buying or selling price. I mean, very early in my career, someone once told me that you cannot buy the RSI. You know, the fact that you cannot buy an RSI at 30, you need to buy the stock at some price. So you can look at an RSI, that's fine, I can give you some clues, but you cannot buy it. So in the end of the day, it's the price that you are trading, and that should be your ultimate guide. Everything else is derived from price and is auxiliary, is a helping hand. There are a lot of good helping hands, but they're a helping hand. In the end of the day, it's the price that counts.
All right. I think that sounds pretty good. All right, Mary Ellen, I'm going to let you go next, and we'll go in order of myself and then Julius, and then we'll let you finish with your thoughts.
Oh, sure. The first statement, and these are from famous traders and investors in the world of stocks, rule breakers make the most successful investors. And how do you feel about that?
All right. For me, being just almost a technical analysis purist, you know, the math geek, the technical geek, I would have to say, you know, I come up with models and systems so I don't have to break any rules so that I can, you know, have that system in place. I can trust it. If I question it too much, if I, you know, break the rules and go, I'm going to buy it anyway. You know, the PMO, yeah, it's going down, but it's okay. I can't do that. So I don't think it's true, at least in my case. What do you think, Julius?
So rule breaker, is that what's the definition of a rule breaker? Is that someone who doesn't follow his or her own rules when they trade a system, or
you may define that. You may define that. It
okay.
Doesn't, yeah.
I think I disagree. And I'm trying to think of an example. I mean, I've worked on trading floors and I've worked with portfolio managers and asset management companies. And I'd say that the common denominator for the successful ones is, I think, discipline. I mean, it comes close to rules, you know. People who are very disciplined and follow a process, from my experience, are the most successful. I mean, I've seen traders who are, is that an American word, punting? In London, it's a word, punting. Yeah. It's like they're punting away. They're just basically gambling. And they can have a very good streak, but then they're wiped out and they're out. You know, so the ones that are consistently profitable are the ones that have a discipline, and the discipline doesn't necessarily have to be a rules-based model. I mean, I've known guys who came in the morning and they had a routine. They came in, they pick up there was no internet at the time. They picked up the paper, they read the paper, they called their peers, they went to the morning meeting, they listened to the analysts, and they did that very, very rigorously every day. And they made very successful traders. And the same with portfolio managers. I've worked with a guy who was still a PM at over 70, Jaap van Duin at Robeco here in Europe. He's sort of a legend. And I can tell you the story that in the Robeco building, everybody was was on Office and Excel and the Microsoft Office suite. There was one copy of Lotus Notes still in that building, and that was for Jaap, because he had all his stuff that he followed every day in Lotus 1 to 3. There was a spreadsheet.
Yeah.
And that's what he did. I mean, he was super successful. So to get back to your question, discipline and following your rules I think I've seen is the most successful people.
What do you think, Mary Ellen?
Okay, well, this particular individual, while a believer in systems and rules, felt that there was a little bit of an art to investing, so that when and if a stock broke key support or whatever your rule system is, that it was very important that you take into account where the broader markets were and that there's a little bit of an art, not consistently breaking rules, just having that flexibility to be able to interpret if the breakdown was real or not. So, so the debate carries on.
I guess so.
I agree with the art part.
Mm-hmm.
Yes.
There is some art to it, definitely.
Right.
Yes. All right. So I'm going to give you mine. Let's get my handy dandy paper here. I'm going to go with the fun one, I will say. So it takes a little bit of preface. So be patient, guys. All right. As medical marijuana begins legalizing in all 50 states, an expected 4,067% industry boom will transform the average American savings into an early retirement nest egg. During the 2016 campaign, President Trump said, "I'm in favor of it 100%. Former Speaker of the House, John Boehner, had once stated that he would never change his mind, but now he says, "My thinking on cannabis has evolved." And today, believe it or not, he sits on the advisory board of a major marijuana company. So I guess that's probably why his opinion has evolved. But even the U.S. Attorney General, and we know Jeff Sessions has been really against it, and he's now saying there may well be some benefits from medical marijuana. So do you think it's time to weight your portfolio with cannabis stocks? I know it's all over Facebook right now, at least on my feed. Cannabis stocks, you need to be in there. So what do you think? Do you want to be in there now?
Well, I can go first.
Yeah, go for it.
Yeah, so I'm going to go ahead and grab the screen here, and I will argue, and I'm backed up by Wall Street analysts, that these marijuana stocks are not quite ready for prime time. The numbers just aren't there, and they're not expecting to see really profitable growth until 2021. This is Canopy Growth Corp, CGC. And this particular stock was one of the first to get FDA approval here in the US for an epileptic drug that treats and helps with epilepsy. The company also got a very big infusion from Constellation Brands, but we can see the stock technically is in a confirmed downtrend. This is one of those companies that while they have backing, funding, and FDA approval, they're still not profitable. And unfortunately, that is going to be the case for quite some time. We can take a look at STG. This is Constellation Brands. They did infuse money into Canopy Growth. And actually it's STZ, and this stock is very constructive looking. Right now it's breaking out of this space. It looks interesting, but really realistically they're still not seeing the income from their cannabis investment. And one last one that we can look at in this cannabis space is Scott SMG, Scott's Group. We can see this confirmed uptrend. This company actually provides, they are the leader, top supplier of hydroponics, which are used to grow cannabis. But again, as it relates to their revenue source, it's only about 15% of their revenue at this juncture. So if of these, I would certainly say SMG is the most constructive, but let me circle back. Overall, I don't think the cannabis stocks are quite yet ripe for the picking. The numbers are too far away, and technically most of them are not very sound looking.
So you would disagree? You would not weight your portfolio, at least not yet, to cannabis stocks?
Not yet.
All right, Julius, what do you think?
Yeah, I think I have to disagree. I'm gonna share my screen with you guys, because what I did is I have thrown a bunch of cannabis stocks on an RRG. I mean, we have to look at an RRG when I'm on the show.
Of course, you are here.
So this is a list of cannabis stocks. I'm by no means an expert in cannabis, although I am from Amsterdam, but believe it or not, I've never smoked any marijuana. And if I look at this is just, it's everything is going towards the lower left. It's losing momentum. It either never had it. This one here seems the best. It's Charlotte's Web Holdings. But it's also moving down. There is nothing with a strong RRG heading. So, and let me put that, because I think to this question there is an important time element. This is a very young group of stocks. It's a very young industry, and timing wise, I don't think you want to have some cannabis or some marijuana stocks in your portfolio right now. Is it a sector that you need to keep an eye on? Most definitely. And I need to tell you this story that happened to me. It's like 4 or 5 years ago when these marijuana stocks and cannabis stocks just started popping up. Legalization started to show up, and I got a call from an American friend, and he had early access to an investment possibility in a company that was that made a trading system for cannabis, so for the plants. And it was very clever, because what these guys did, they took one of these online trading systems that was used to trade stocks and futures and stuff, and they turned that around to trade cannabis. Because in cannabis you got different harvests, you got different quality, you got different, you can make it like a future. And what they did is they automated the whole process, that they could track a plant from a seed to growing to harvesting to what distributor it went, etc., etc. So it was a very high-tech system, and I liked the way that they were using existing financial technology and apply it to the cannabis market. But I am not in America, and I didn't know that. So what do? I call my good friend Tommy Dorsey, who I'm sure you guys know as well. He's a very great guy, ton of experience. So I tell him, I say, Tommy, listen, I got this offer to participate in this investment. What do you think of cannabis? He says, Julius, it's the reversed inhibition. He said in the 30s, they took the booze out of they made booze illegal and put it in the hands of the criminal, and the criminals made a lot of money. Now they're going to take cannabis out of the hands of the criminals and make it very taxable. They're going to tax the hell out of it. It's a very great investment, and I think he's right.
Mm-hmm.
The question is that already starting? And that I am not sure. So timing wise, right now, not very fond of cannabis stocks.
All right.
Longer term, the legalization, probably yes, you should look at it.
And there was one other dynamic I failed to mention. As far as the black market for marijuana, it's still cheaper for individuals to purchase on the black market, and that's been hindering the growth of these legal places.
Right.
Yeah.
All right. So I would have to say I'm also going to disagree with my own statement. For me, I know. Hey, it didn't say you had to believe it.
That's true.
Tom's not here. I get to make the rules. So I'm sharing my screen of MJ. I actually really think that's a cute ETF name for this alternative harvest ETF. And I thought it would be a good way to look at it on a weekly chart. And because honestly, so we're looking at a range here between $23 and up to $44. To me, I can't trade that range. And to think based on that statement that they're talking about Americans making, improving their nest egg over, wading toward the cannabis area. I think you're right, Mary Ellen, and I think you alluded to it as well, Julius. It's too early. It's still too crazy right now. And honestly, I look at the chart, not only do we have this enormous trading range that I don't want to try and ride, in the longer term, and I'm not going to pay so much attention to these crossovers or anything. I just look at it as this head and shoulders sort of pattern, trying to show up sort of a complex one, with a confirmation all the way down to that 23 line. Not to say that it is going to, execute or anything, but the point is, I think it's just too crazy right now. And I know we had talked about Tilray was in the news all the time for a while because of its volatility. And I'm going to pull this up on a regular chart here. But I mean, this is classic parabolic, guys. I always talk about parabolics. My dad, Carl Swinland, always talks about parabolics. And this is pretty much textbook. You had this amazing run. And again, look at Tilray. It was at $20. And at one point, it was $300. Great ride. But that fall, as it always happens with these parabolics, just totally collapsed. So, yeah, not a fan there of getting involved. Of course, the volatility has been altered a little bit here, but I have to agree. I think that this would be kind of a bad place for Americans that are maybe not as involved in the market as we are to weight a portfolio with something this volatile unless they're very young and have a lot of risk appetite. So
you can add these charts to a list of cryptocurrencies. They look the same.
Absolutely. I would have to say it acts a lot like that. All right, Julius, I'm going to let you give us the next statement.
All right. Yeah, my next statement is that I follow Twitter, not every day, not very rigorously, but I'll look at it and I tweet out every now and then under the handle @RRG Research. And what I noticed is that there are a lot of people talking about gold recently. And that's okay, because there's a lot happening in gold. But now I see people showing charts of gold in all sorts of currencies. Gold expressed in euros, gold expressed in yen, gold expressed maybe in Bitcoin, I don't know, whatever. For me, gold should be looked at in US dollars. The gold market is a US dollar market. Gold is traded in US dollars, full stop. So if you're looking at gold expressed in, let's say, yen or euros, I don't think that is right to do, because that's not where the market is being made. So gold breaking out in yen terms doesn't tell me anything. Gold breaking out in dollar terms, yes, then I'm enthusiastic. So I want to know what you guys think. Should we be looking at gold in other currencies than US dollars?
All right, Mary Ellen, I'll let you go first.
Okay, I will start by stating that my knowledge of currency and currency trading is not acute. The sound statement that I'll make is the fact that gold is a US dollar denominated currency. So with that, when you're looking at relevancy, you are going to want to use a dollar denominated chart in order to make a sound decision. And we've talked a little bit about this earlier, the fact that the relationship between the dollar and gold, for the most part, there is relevance there. And I would argue that with that, you would need to stick with that US dollar denominated.
All right. I'm going to say that absolutely. And I think it really goes back to what we talked about. I'm sure when you've been on the show, both of you, that, ETFs, those foreign ETFs, the France ETF or the Taiwan ETFs, those are based in US dollars. But that actually can hurt you a little bit because, again, you kind of want to see what's going on with the currency market that's there. And so for me, I would find it completely useless to look at gold in a euro, because gold its basis is in the US dollar. So to me, it would make no sense. What about you, Julius? Do you agree with your statement or no?
Yeah, I agree with my own statement that gold should be looked at in US dollars. I'll take the opportunity here to show the people how you can actually do that on StockCharts, because what we're looking at right now is a gold chart. In this case, it's monthly. That's quite long. Let's make that a weekly. So this is the dollar gold, which is the gold continuous contract on CME. If you want to look at this chart in, let's start with euro terms, what you are actually doing is creating a relative. And what we're doing is we're doing gold, colon, and then, it's already here because I've been looking at it. So divided by euro US dollar, and now look at how this chart changes. Boom, here it is. Now this is gold expressed in euros, or if you want to do it in Japanese yen, then you change the euro into GPY, and now you see it in yen. So you see that there are quite significant differences in how this chart looks in terms of where it's breaking out or where it's not breaking out, etc., etc. So for the sake of the discussion, I think that you should always look at gold in US dollar terms and not in anything else. If for some reason you want to look at gold expressed in some other currency, if we have the currency pair on the system and we got the majors, then the way you do it is take gold divided by whatever the currency is and make sure that you express it in US dollars. So if you want to look at gold in yen, you need to do JPY USD. There's also USD GPY, but you want to do it GPY USD instead of USD GPY to get the proper comparison.
All right, excellent. Well, we have time for one more. We'll have to give our responses quickly because I want to take a look at the poll that relates to that question. And Mary Ellen, I know you were the one who came up with it.
Yeah.
To do with diversification, I think.
Well, I do have a quote from a very famous investor, but if I tell you, it'll reveal the answer. So my question has to do, or the statement has to do with diversification. Is it relevant, important in investing processes as far as having a wide-ranging number of stocks versus a very select focus group?
All right. I guess I'll take it first. I'm going to really talk in general terms rather than look at any charts. But I find that I want a very mixed portfolio, not necessarily that it's diversified throughout all the sectors necessarily. We'll be talking about our trading routines at the end of the show. And, part of my routine is sector rotation and analysis. So I will, move things back and forth, but I like to have my 3 accounts, that long-term buy and hold horizon, the intermediate term monies, and then of course the cash account, the fun one. And so I take a different risk level in each of them. But I would have to say that, some of the positions I have are ETFs, and those are diversified. But I have a lot of just single stocks. So I guess my answer to the question, oh gosh, because I kind of am both ways, I'm going to say that no, I don't think diversification is necessarily important because it's better, I think, to have that opportunity to weight one sector versus another, or weight certain stocks to another. And let's face it, if you have the risk appetite, stocks are kind of the way to go. What about you, Julius? Quick answer. I know I took too long.
Well, I can actually give a very, very long answer, but the short version is that I think that diversification is very important in terms of risk that you're running in your portfolio. Now, that correlates like 100% with the size of your portfolio. Because if you run like a $1 billion portfolio, having 5 stocks is like very, very concentrated and very, very high risk. I think I've read an article years and years and years ago that the optimal diversification is like 7 positions. Now, for very large portfolios, you can make that into, let's say, 7 sectors, and you can, in each sector, take 7 industry groups if they are there, and in every industry group, you can take 7 individual stocks. So by using that rule of 7, you can build up to a portfolio that is as big as you want and still have your proper diversification. The reason why you want to have some sort of diversification is because of risk mitigation, but you don't want to over diversify because you'll be buying the market. If you buy 300 out of the 500 S&P 500 stocks, you're probably better off buying the S&P 500. So
okay,
there is a balance there.
Very good.
So
and I'll go ahead.
Diversification, yes or no?
Sorry. Yes or no, Julius?
Yes or
Sorry.
no? Agree or disagree?
Yes, it's important.
Okay.
Very good. And I'll go ahead and end by telling you Warren Buffett's statement. It's wide diversification is only required when investors don't understand what they are doing. And I'll tell you, I worked with some very famous portfolio managers. Ken Huebner's one. He had 10 stocks in his focus portfolio, and he ran billions. And I'll tell you, it didn't always work, but when it did, he was a Morningstar Manager of the Year more than once with that approach.
Excellent. Well, let's see what our audience thinks about this. Whether we're looking kind of mainly at just how many positions you have in your portfolio in this poll. So not necessarily whether they're diversified in terms of sectors and that sort of thing. So let's take a look at that. I think we have that available. There we go. So interestingly, I know I answered the question. I'm actually in the minority with 10 to 20 stocks. Now, it's not to say I cut it off at 20 or I insist that my portfolio have 10. I mean, I had 0 back in early December. I knew that the market was getting ready to tank again. And so I just got completely out. But typically 10 to 20 positions, I would say. How about you, Julius?
I don't really trade. I hold sort of tactical positions, less than 10.
Okay.
But they're all ETFs.
Mm-hmm.
I'm in the 5 to 10 stocks, super high growth, and diversified among that growth. Yeah.
All right. Interesting. So our audience really likes to be completely out there. So I think that's pretty interesting. All right, well, that was an excellent segment. I really enjoyed the roundtable. I thank you, Julius, for coming in for that. But I know we want you to stick around for the My Trading Routine at the end of the show. We'll kind of give you our, how we start the day, how we end the day, that sort of thing. So
I'll be here.
Yes, so let's do that. Now I'm going to go ahead and we'll move right into the 10 and 10. So Mary Ellen, I know that you're getting those stock symbols ready for me. So
you bet.
Get my screen up here and working.
And the first one you might know already, it's INFY.
Okay, actually I want to do this over here. All right, INFY, yes, and I know that we had a request for this a few days ago, and I messed up giving you the symbol, Mary Ellen, and so we did INFI. So I would give them that opportunity. All right, so I need to annotate these quickly. That's the whole point of this segment, is not necessarily to just let you know what to do with your stock picks, but just to show you how quickly you can annotate. So you can see this giant gap that we had. At first, I might have been concerned about an island, but the way this is shaping up, you can even see in the thumbnail, it's trying to be a little bit of a flag, I think, or even if you wanted to go with a symmetrical triangle. I mean, there's so many things you could do. I suspect if you had a different timed chart, it might be different. So let us go over here. And, oh, I want a shape. That's why I'm struggling here. So here is your buy signal. We're not really in overbought territory yet. So I think that you've got some room to continue to grow. We now have a scooter that is in the hot zone. So I think all of that looks great. Look at the OBV is still moving. It did top, but I think this one looks pretty good. If I held it, or if I had it, I would hold it. If I, as far as buying it, might want to wait till it comes back just a little bit. I suspect it'll probably test this support, but I might wait just a little bit before I enter it. It's a little late in the game for me. I like to get in there before the PMO has really made that kind of a move. So, I did all of those and I didn't save them. So it's okay. I will fix that, guys.
Okay. The next one we actually had, I believe, earlier this week. It's TTD, Trade Desk.
TTD. All right. So here we go. Ooh, kind of not a good chart, I would have to say. We broke mainly, so there's your overhead resistance. There's your short-term support level. We're heading right back down to it. Of course, that 50-day EMA is holding up as support for now. But what would concern me, especially in the short term, is the breakdown from this rising bottoms trend line. That's a problem. You were in a nice rising trend channel and we've lost that. you also can see the PMO is showing how that momentum has completely fallen apart. So the good news is, I guess, if you want to look at some good here, is the OBV volume has been really confirming that upswing. So maybe this is just a hiccup, especially when you look at this strong scooter going on here. So I would say if I had it, I would still hold on to it, but probably tighten my stop up maybe a little bit to just under 220. That, I guess that would be my recommendation. I'd hold it, and then I think this could be a buying opportunity, but I would want to see that PMO turn back up to the upside. So let me get this 7. It's
Okay, this next one actually was your pick on Monday for your Monday setup. It's OK.
I hope it looks good. Yeah, that's okay. OKTA. Let's see if it's okay. All right. Well, it's not been doing too much. I can't remember what I ended up buying it at. I didn't actually go buy it, but that's the exercise that we do with it. Right now it is in a little bit of a consolidation pattern here. I don't think that it's a worrisome one. You could look at it as a possible wedge going on here, but the PMO is hesitating, but I don't think that it is a bad thing right now, because it's doing what price is doing, moving sideways. OBV hasn't really lost anything. We had that big area of accumulation. Maybe it's time for a little bit of distribution here, but overall, I don't think it looks too bad. If I did have it, I would continue to hold it. I think my stop would be set. I can't remember what I said it. I usually do that for, I just did that again. I did all of those annotations and I got to do it again. All right. So yeah, if I had it, I'd hold it. If I'd consider buying it if that PMO gets a little bit strong.
Okay. The next one was, we reviewed it earlier. It was upgraded today, ABT.
All righty. Okay, interesting chart here. I kind of like this one. All right. Usually I kind of can tell if somebody's used one of my scans, and I think this might have been off of a scan. All right. So, the volume pattern looks pretty good. You can see the rising bottoms going with the rising bottoms on price. We've got a scooter now that's joined into that hot zone. Oops, go back here. And, I'm going to do those support resistance lines in here. That's your short-term support. We dipped down the last 2 days below it, but I think you could still see some upside potential. Actually, I could see a buy on this right now. Certainly, if I had it, I would hold it and not sell it. But I don't make recommendations to buy. That's just not my thing. I would just say that this chart is looking pretty healthy at this point, and maybe a little bit tasty, as we say on the show.
Great. Next one is ATVI, Activision.
TVI. All right. Pretty boring chart, honestly. Hasn't been doing much. If I owned it, I would be out of it just for that fact. It's just not doing anything. It's been in this trading range like forever, since December of last year. Think about what most stocks have done since December 24th of last year. They have mostly trended up. And when you see a stock like this moving sideways, not anything you want to be really involved with here. You've got a PMO sell signal right now. Volume pattern is looking pretty ugly, with OBV declining tops. The scooter not looking that great. So I don't like it. Certainly wouldn't buy it here. If perchance I had bought it, I would sell it. It's just dropped below that 50-day EMA and is trading there.
Great. Next one, well-known name is Tesla, TSLA.
I know this was a darling of yours at one point.
Okay.
Last
year, and it's come back into favor. Yeah.
Yeah. All right, here we go. Wow, it's starting to really perk up here.
Yeah.
Took it a little while. but it is nonetheless a nice rising trend going on. I've got that PMO or trend model buy signal with that 20 crossing above the 50. PMO is not overly overbought. It's not overbought really to the extremes at this point. I'm going to go ahead and mark the OBV up. It is starting to trend up as well. I would like it to see it, I'd like to have seen a little bit more out of volume, but it is a strong move. They say price follows volume, and I would say I agree with that. And if it doesn't, there's a problem. So at this point, I would say if I had it, I would hold it. It's still on that rising bottoms trend. You've got that buy signal. The time to get in was when that PMO had the buy signal. I wouldn't get in right now just because it's really made a lot of that move to the upside already.
Great. And the next one is a biotech stock that's doing quite well, ZYME, Zymeworks. It's a tinier one. It's about $800 million market cap, but
yeah. Wow, okay, interesting. Well, certainly a nice rising trend here, but it does have some of the features of being parabolic. It's not like horrible, but nonetheless, I mean, I could see that, it could be considered that even if we tighten that up. But usually with these, you kind of expect that really bad breakdown. I like that, you look at this and see that decline tops trend line broken, but look at this in the thumbnail. I don't use candlesticks, but I just know that when you open and then you fly high and then you pull back past the open, the interest isn't totally there. So you've got the PMO sell signal here. I'm not a fan. I'd be very concerned about a breakdown here just based on even just today's action. So if I had it, I would sell it. I would not definitely buy it right now.
Great. The next one, they reported earnings today. It's Dover Corp. DOV is the ticker symbol.
All right, excellent. And yeah, I don't, it's funny. I don't know how people pick, I don't know, is this something in someone's portfolio and they're interested in what's going on? But I always find these pretty interesting, the ones that get picked. Now, I can just tell you, looking at this right now, I would have gotten rid of this likely before that big breakdown, but certainly after the big breakdown. Of course, yeah, I would have probably gotten out. I'd missed maybe a 2% move, but I would have protected myself. I still would see more downside action here. It is up only because it closed so low last time, but we set another intraday low, a lower low. We've got a PMO sell signal here. There are just too many things going wrong with the indicators, in my opinion. You can see all three of the moving averages are moving down. That 5-day EMA is crossed below the 20. If you have it, sell it. Definitely, I would not be buying it right now. I just wouldn't.
And then this next one, they're due to report next Thursday. It's TMO, Thermo Fisher.
TMO. There we go. Well, it's bouncing off the 50-day, and the PMO is starting to come back to life. So, you kind of can see that it's trying to turn. Volume pattern, though, with the OBV, not so good. And notice that we already, and I'm just going to take it to right here, we had already had a negative divergence set up here. This was a good warning that something bad was going to happen. And then you had right after that, a PMO sell signal right in there. Let me make that a little darker for everybody. There we go. So you had that PMO sell signal coming in even before what we saw here. Yes, it could make a turn back to the upside. I suppose if I held it, I would give it another shot because it has bounced off the 50-day EMA. I don't think it's that attractive to get right into it right now.
Very good. This last one, Disney, DIS, on the heels of Netflix earnings today. Yes, in that same area.
Not a happy, Mickey Mouse doesn't look too happy. All right, let's go ahead and here's our rising bottoms trend line. let's make that blue or red. We'll make it red for this exercise. And we broke down today. That you don't want to see that. If I would be concerned if I had it, you know, the next area of sort of intermediary, I would call it support, would be about 137.50. You know, it matches up really quite well with that 50-day EMA. Depending on when I got in, I would probably hold it if it went below that 50, or even if it got below that 137.50. I mean, it's not a horrible stock, but I just don't feel like writing it all the way down. If it moves past that area and breaks down below 137.50, well, I'd look for 130. So, you know, it has some potential here, but right now, you know, I'd keep it if I had it. Wouldn't get in now. So, and that's
Very
it.
good. That's,
Hey,
you
we
did it.
Hey. All right, so there are those symbols that I just went over. They are mostly in the MarketWatchers live chart list. I'll be sure, and I think Tesla might have been one. I will make sure that I get the rest of these in annotated after the show, but most of them are there already in the MarketWatchers live chart list. All right, we will be right back after this message. Don't miss my trading routine. And Julius, this is Mary Ellen's. Time for our final market update. Wanted to take a look at what we have going right now. Dow Jones currently is down right now a little over, well, almost 90 points currently. The worst performer though right now is the NASDAQ 100. You can see the NASDAQ is down itself a little over a 0.5%, or I'm sorry, 1/3%, but the NASDAQ 100, I don't have that on here. It is down a 0.5% right now. Good news, Russell 2000 is now in positive territory, as is the New York Stock Exchange as well. We have treasury yields are higher right now, reading at 2.073%. VIX is mostly it's unchanged now. It's reading just under 14 at 13.97. UUP is down just about, it's only 1 cent, 26.29. Gold is now down. It had made it into positive territory, but is now down 4 cents to 134.54. Oil continuing that terrible slide. It is now broken down below the July low. Lots of trouble going on there. TLT is trying to make a comeback after bouncing off its moving average here, the 50 days. So TLT is at 131.36. And that's all I have for our final market update. We're going to go right into Tom doing a Talking Technically segment.
Divergences occur when price action is telling you one thing, but your momentum oscillators are actually showing slowing momentum in that particular direction. Let's take as an example Citrix Systems. A negative divergence emerged when we saw higher prices from May to June of 2018, and yet when you looked at the PPO, you have a much lower reading on that particular momentum oscillator. A strengthening PPO is an indication that your short-term moving average is pulling away from your long-term moving average. But when you print a new price high and you see a lower PPO reading, it's telling you that price is moving higher, but that lower PPO reading is actually telling you that momentum is slowing. So this is what's referred to as a negative divergence, higher price, lower momentum. The next chart is Tractor Supply Company, TSCO, and I'll explain a positive divergence here. In this case, we have the exact opposite action, we see the price action is moving lower. As price action continues moving lower, the PPO actually starts to turn higher. So that is telling us that the price momentum to the downside is slowing and can be a signal of a price reversal. As you can see in the middle part of April, tractor supply reversed and began a much longer uptrend.
All right, we are back. Thank you, Tom, for recording that talking technically. It was very good, even though you're not here today. All right, so our final segment, we're going to go over our trading routines. So, you know, mine changes regularly. I think everybody's does, but I'm going to just sort of share with you typically what my trading routine is every day. And this is a trading routine. This isn't necessarily my research routine. This is how I get set up to find a good trade. So the first thing I do is I prepare for MarketWatchers Live. So I get up to the minute, you know, I know what the sector rotation is. I know which stocks are moving. I have a much better idea what the market in general is doing based on all factors. So that gives me, honestly, my first clue as to whether I want to trade or not, you know, at all. So that's kind of my first stop is, you know, MarketWatchers Live. But then, you know, during the market day, I honestly try to avoid deep research, I would say, about particular stocks. You know, I would prefer to wait till after the close. And I think this is just because of what I do for Decision Point. Most of our indicators do not go final until about 15, 20 minutes after the close. And well, I'm married to them. I mean, I have to know what's going on because the very first thing I need to do is see what's going on in the market in general. If it doesn't look good, if there's just something that doesn't feel right, my trading journal, my trading routine ends. I'm not going to spend too much time, but if I think market conditions look pretty good, then I go right into my market charts and indicators. I do my technical scans to look for some good candidates. I analyze my candidates in Candle Glance. I think if any of you have watched my ChartCon presentation this last year, you'll understand the way I do that. But you know, if the setups are there, if I see something that looks promising and fits my model, I stay true to that. Then I'll go ahead and just I'll take the plunge. But that's typically my routine for trading. And then of course I follow up on it. I try my trades are usually intermediate term, so I kind of prefer to not like watch them all during the day and playing the emotional game of up, down, up, down. I prefer to try and wait a few days or even at the end of the week to review my positions. But I do have alerts set. So if something weird goes on and I need to get, you know, my attention needs to be there, then I will go. But typically that's just my routine. I mean, it's not too complicated. And, you know, if you want to learn more about it, like I said, I did record during the ChartCon 2018. My routine was part of that presentation. So I guess maybe I should do a blog on it. I don't know. You can tell me in the survey. I'm going to go ahead and pass it right now to Mary Ellen, my co-host, to go over. Actually, I think I told Julius he was going next, but
whatever works.
Yeah, Mary Ellen, I called on you.
Yep.
You didn't raise
ladies first.
Ladies first. There you go.
I'm
right.
it. Okay.
Go for it.
I'm going to share a couple of items as far as my routine, and it will involve both daily as well as at the end of the week. So from my work, I'm not a super active trader. I'm not in and out of stocks very quickly. Some of my holdings I've had for some time, as long as they stay strong. But certainly on a daily basis, I want to know where certainly the action is, where the markets are, because oftentimes when you are viewing the markets on a daily basis, you can get clues. So really quite simply, this dashboard here is going to be quite helpful to me, market movers. So for instance, today on this top 10, I want to see those stocks in the S&P 500 that are the most active, not just up or down percent-wise. And this is going to give me clues. Now, certainly I'm wed to the markets. I was tuned into the fact that Netflix came in with very poor numbers. However, if you are an individual that wants to get your arms around the market, this was very significant news. The stock dropped. So oftentimes you'll see other areas, we talked about Disney, other stocks that are going to be impacted by that. So this is my first go-to. I want to see the market movers, where the potential action is. It really tuned me into a move back into semiconductors a couple of weeks back when AMD was up there, and a number of other semis started getting to be quite active. They were hitting this highly active list, alerted me to that. From there, I can then go ahead and drill down. So that's going to be my first go-to on a daily basis. Another go-to is this sector summary. I really like this because it's going to really, again, right at the get-go, tell me. Now, today we're not getting a lot in the way of real significant moves, but financials are interestingly coming back into play. Staples that have been strong are we're seeing a bit of a move into defensive areas today. That's a difference because for this week, most of those defensive groups were down in the bottom quartile. So this is just going to give me a quick snapshot overview of where the strength is on a given day. And all of this is with an eye toward potentially seeking out sector rotation. Julius, I'm going to hope that you're going to get into that. But for my work, that is a very relevant component. I need to get in front of that rotation and then from there pull out strength. So let me go ahead from there and show you as far as another daily routine item. This is a watch list that I've put together here in StockCharts.com, and you can really sort this any number of ways, but quite simply, I want to see which of my names are getting traction on a daily basis. And from there, you can certainly pull up the charts of those stocks and get even further identification. So some of these names I own, others are on my watch list, and I'm waiting for them to turn positive or if they begin to break down. And so really quite simple as far as that daily routine. Number one, where is the most action or activity? Is it pointing toward a potential rotation into a given, not just sector, but industry group? How is my watch list doing relative to my holdings? Do I need to take any action? So it doesn't take a lot of time. Then on the weekly, I do still pay very close attention. I spend Friday, Saturday, and Sunday putting together my weekly MEM Edge report. This is a report that goes out to professional money managers as well as self-directed investors. And with that, I am super focused I want to see, this is healthcare stocks stumbled. So I get into these sectors. So I pay attention to that sector summary on the weekly. And then from there, I really drill down into sub-industry groups within the sectors. And from there, I select stocks. So the stocks from that MEM Edge report are going to be heavily weighted toward where the strength is. Right now, there are a ton of software stocks that have been identified. So that's all part of the weekly, so that when I go into that new week, I can continue to have confidence or not in a given area of the markets. And that's my routine.
Excellent. You mentioned that you do some of this research and you have a newsletter. Is that something that our viewers could take a look at?
Oh, absolutely. Yeah, that's a great question. You can go to meminvestmentresearch.com. That's my website. You'll see a recent sample of the report. It's about 12, 13 pages long, but it's a very easy read, very visual, and you can trial it out. Yeah, the performance has been outstanding.
I know you're so coy about having it, so I wanted to make sure people know that they can get more Mary Ellen if they'd like it.
That's
All
right.
right, Julia, it's your next up. What is your trading routine? And as Mary Ellen hinted, I suspect it has RRG involved in it.
Yeah, I don't trade.
Well, that does make it makes it easy. I know my.
No, I don't trade. In a trade as in defined as in being active in the markets on a daily basis.
Okay.
I'd say I invest in a little bit longer term. And how I do that is really a top-down approach, obviously using RRG, but also doing a lot of asset allocation. So my process, so to say, starts with looking at asset allocation on RRG, and we've pre-programmed that all in the RRG page. So if you go to the drop-down box that says groups, the first one says asset allocation. Now this whole setup is geared towards the US markets because, our audience is, I believe, like 95% US Canadian based and only a handful outside. And the people who are not US Canadian based are probably very interested in US markets. We do have London and we do have India, so it's coming up. But for now, the majority is still US based. So my approach here is for the US markets. Now, this RRG shows you a number of asset classes. You can see them in the table below. It's a couple of bond markets, corporate bonds, treasury bonds, and high yield bonds. There is commodities, there is real estate, and there is obviously stocks, which is the S&P 500 or SPDR, how you say. Now, this is my starting point, and here I will decide how much of the portfolio needs to go to stocks or to bonds or to anything else. And as you can see here right now, stocks are getting more and more out of favor on a relative basis, being outperformed by corporate bonds and treasury bonds quite rigorously over the last few weeks. So this is making me, despite the breakouts that we see in stocks, I am holding back because I see this happening, and I see this as sort of a warning sign defensive. I know we've broken out to new highs. I know that's super bullish. I know that these trends are up, but this is something that worries me, and it needs to change before I can go all out stocks again. Mm-hmm. Nevertheless, I mean, if you have a portfolio that is at least a little bit diversified, in terms of asset allocation, you will have some money in stocks. Whether they go up or down, you got some supply in stocks there. So the next step would be to go to the sectors, and that's where I run up my U.S. sectors based on the ETFs, and I make a call on which sectors I believe will outperform the S&P 500. So to get this picture right, you have an asset allocation. Let's say that because of my concerns about the stock market, my holdings in stocks are now not, I don't know, whatever they should be, but they are a lot less. So everything I do in sectors is as a percentage of the holding in stocks. So if I'm holding 40% in stocks instead of the normal 60% of my portfolio in stocks, my 10% in a sector is now 10% or 40%, where it used to be 10% or 60%. So looking at the sectors here, this is a weekly RRG. I mostly use weekly RRGs for my decision-making process. I bring up the RRG, and then what I do is I use the control arrow keys to actually quickly browse through these rotations to highlight each and every individual sector. And by doing that, I can quickly see and gauge what they are doing. And what I see here is that we have some very defensive sectors doing very, very well on the RRG. So we've got utilities here, we've got staples here. It doesn't have a lot of momentum, but it's still traveling right on the RS ratio scale. We've got real estate, we got healthcare doing really, really good. But also we've got like financials, which is an important sector, doing not so great. Technology is turning around. That seems to be coming back. This is discretionary, typical growth, not too good. Yeah. And then we've got energy way on the left. We got industrials, and we got communication. So this is how I make up which sectors I want to do. Now, for me, it usually stops here. This is because I told you I'm trading ETFs, I'm using ETFs. So I try to pick like 4 to 5 ETFs to create the sector portfolio. Now, if I have a very strong feeling, and we've talked about this a while ago, and I've written an article about it a while ago, how you can actually put some icing on the cake with individual stocks and calculate how many you need inside an ETF. So let's say that the utility sector is now doing very well. I can then go into the utility sector, list all the individual utility stocks, and maybe add a little bit of spice to my portfolio by picking 1, 2, maybe 3 utility stocks and add them to my holdings, which means that I'm having utilities and I'm sort of overweighting these individual names. Now, this is a bit crowded, and again, this technology of using control arrow really helps me to, well, this one here I really like, WEC, that looks really nice. That could be one. NEE could be one. XEL could be one. This one not. This one is rolling over. This one already has rolled over. So I can then really, go through my list and pick a couple of very nice stocks and look at that. When I then have put together the portfolio, I set it up as a list, and on a daily basis, just look at that list on an RRG, see if they're still doing well. If I'm doing presentations for PMs, I always make a joke that as long as all your holdings are in the top right-hand corner, you can go play out golf. And if they start to rotate back down to weakening, you need to get back into the office and act. And I know that Tom Bowley is now playing golf, so his stuff is probably all in the leading quadrant right now.
Yes, he had to give us a little poke in our chat room that, hey, I'm off golfing.
Well,
now.
I know he's not golfing, but I mean, I thought it was a good joke.
Oh, yeah, absolutely. So I realized, I didn't really talk too much about my scans. So, I'm going to go ahead and share the screen here and let you see just some of the scans that I do. Because honestly, I won't trade unless it comes out of one of my scans. It's just the way it is. So I've got a few minutes left here, so we'll go ahead and take a peek. So from the advanced scan workbench, I'm going to show you just some of the ones. The general PMO scan, you can get to the link from the Decision Point blog, which is free. You can get to the link from the bottom of the MarketWatchers live blog that is free. So there's opportunity there to get this scan. This is my basic scan. I admit that if I don't get a whole lot of takers on this, if I don't get a lot of return on this particular scan, like I only got 3 here, I will probably go and try my other scan. This one is the one I just recently came up with, bullish EMAs with a mid-range scooter. This one I tend to get a lot of hits on. I put them over and over in the MarketWatchers live recap, but I'll put them in again. And if you run this scan, you end up with 33 entries. So, and of course, the best way I do the look at it is, where's my scan dump right there? It's my transient chart list. I know that anything that is in there will be overwritten. So that's a really great tool to have. And I just move it into the candle glance. And now I can look at, the ones that have the interesting chart patterns. This is turning over and is broken from that trend. We see the PMO is trying to turn down. I mean, it's just an easy way to go in and find what my trades will be. So that's pretty much, I'm going to be honest, I always go from a scan unless something Tom presents looks especially interesting on MarketWatchers Live. So, wow, end of a show. This was so much fun having you on, Julius, and I absolutely love these panels, except that I have to make sure I look okay in the morning. But it's just a lot of fun. So I want to thank you for being here.
You're more than welcome. It's my pleasure.
And Mary Ellen?
Very good.
I'll see you tomorrow. We got
That's right.
more this week while Tom is out. So looking forward to that. And
we'll make it a blast.
Oh, I know. We have a really good time. Not that I don't have a good time with Tom, but I don't know. We are friends outside of StockCharts. We live in Southern California nearby each other. So I love it. I get to get all of the information from her. and she gives me some download. I give her some downloads. So anyway, I do want to thank all of you though for being with us today. It was really a lot of fun. If we could complete that survey, as you exit, that would be really excellent, because we do read every one of those comments, and we absolutely love to get your feedback and hear what you think of Market Watchers Live. And as a quick reminder, Market Watchers Live does air 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern. Have a great afternoon, everybody. We'll see you back here tomorrow. Happy trading.